The career of Frank Albert Fetter spanned a most fascinating epoch in the history of economic thought. His dissertation was published in 1897 when Fetter was 34 years old, and his last published article appeared in 1949, the year of his death. He was part of the generation of economists who had the formidable task of working out the implications of the marginalist revolution. Fetter had carefully considered the place of his generation in the history of economic thought. In 1923, he wrote 2 articles for the Journal of Political Economy. In the first article, The Rise of the Marginal Doctrine, he looked back on the developments of economics since the marginalist revolution. Fetter wrote, quote, "It was between 1871 and 1890 that value theory took its position of eminence to give a new organic unity to economics. But those who came into economics at the end of this time, say in the 90s, must smile at the illusions of an unknowing younger generation when they hear the value theory at that time described as a body of dogma already fixed, unified, and surrounded with traditions. That was a period in matters theoretical of storm and stress, when even those portions of the newer value theory that are now most generally accepted and are beginning to be referred to superciliously in some quarters as passé, were struggling hard for recognition, and other issues of importance not yet settled among economists were beginning to be apprehended and contested. There was no one authoritative value theory, but the older Mill-Ricardianism was still entrenched in most places of preferment, while the various conflicting versions and combinations of the newer doctrines were slowly modifying opinion in many directions." Close quote. Fetter held an unconventional view of who the leading lights of the marginalist revolution were. He wrote, quote, "The names of Jevons, Menger, and J.B. Clark are most fully representative of the 3 creative sources of the marginal theory, though Bumbavork and Wieser have outstanding importance in some respects fully as great." Close quote. Fetter not only identified with the Austrian school of economics, but was part of the branch of the school that developed Menger's causal-realist project. About the early Austrians, Fetter wrote, quote, "Every theory ultimately meets 2 tests, one that of internal consistency, the other that of consistency with reality. Each of these is impersonal, logical, nonpartisan, and not simply an adjustment of beliefs to preconceived ends, and it will hardly be disputed even by its severest critics that the subjective school in much of its work reached the highest level yet attained in economics in critical methods and impersonal reasoning. Whatever their own faults of method and doctrine, they began a new era of tireless, impersonal, nonpartisan criticism. It is mistaken to claim that the new value theory was a creation of a generation of closet philosophers, withdrawn from interest in popular welfare and from contact with practical affairs." Close quote. Fetter's omission of Walras as a leading light of the marginalist revolution highlights Fetter's devotion to economics grounded in the human person, rather than the formalism of Ricardo or that of Paul Samuelson, which would begin to sweep across economics shortly after Fetter's death. In his 1923 article, The Rise of the Marginal Doctrine, Fetter wrote, quote, "The great task immediately before the economists of this and the next generation is a deeper study of the human factor in the economic relationship. All economic problems involve the relationship between means and ends, the physical world of nature with the spiritual world of men, the end of all economic action." Close quote. Ludwig von Mises cited Fetter's 1904 book, Principles of Economics, as an inspiration for his concept of consumer sovereignty, the very principle that binds all economic production in society into an organic unity, as Fetter put it. Mises wrote, quote, "The consumers determine ultimately not only the prices of consumer goods, but no less the prices of all factors of production. They determine the income of every member of the market economy. The consumers, not the entrepreneurs, pay ultimately the wages earned by every worker, the glamorous movie star as well as the charwoman. With every penny spent, the consumers determine the direction of all production processes and the minutest details of the organization of all business activities." Close quote. In a 1945 review of Mises's book Bureaucracy, Fetter expressed the idea of consumer sovereignty in these words. Fetter wrote, quote, "The Austrian school traced the ultimate sovereignty over price to the individual subjective valuation of consumers, thus giving new emphasis to the democratic character of free enterprise and new meaning to the price system," close quote. Fetter's major achievement was to work out this new meaning to the price system for the so-called theory of distribution. He recognized that the classical theory of income distribution had not yet been reformed to bring it into line with the subjective value theory. In 1901, Fetter published an article assessing the theoretical tasks that lie ahead. He wrote, quote, "The concept of capital must be given an importance in economic theory corresponding to the dominant place of capitalistic enterprise in present industrial affairs. The concept must be redefined so as to correspond more closely with commercial usage and the needs of practical discussion. The conventional division of the factors of production is illogical and must be abandoned. This involves a restudy of many problems and a rewriting of large portions of economic literature. The doctrines of rent and interest as currently taught are hopelessly entangled in these old and illogical distinctions. The two forms of return for material goods must be considered as differing in modes of calculation, not as to kinds of agents and kinds of returns," close quote. Like Mises, Fetter understood the process by which entrepreneurs in a market economy brought resource use into alignment with consumer preferences. Competing bids by entrepreneurs for resources determine resource prices. No matter what type of resource the entrepreneur is buying, Fetter realized that the implications of using a resource's productivity on the enterprise's bottom line is the same for each and every type of resource. A general theory of the rental price for the productive service of a factor of production followed. Whether land, labor, or capital good, the price to rent the productive service of a resource is the additional revenue it generates from consumer demand for the product it aids in producing. Having resolved the puzzle of the relationship between the prices of consumer goods and the rental prices of producer goods, Fetter turned to the intertemporal relationships of production. His attention was directed by his desire to extend the insights of the subjective value theory to current business conditions, that is, to the highly advanced capital structure of a modern economy. As in explaining the rental price of the productive services of a resource, Fetter went directly to the root of the matter. Building and using capital goods necessitated making an intertemporal valuation because the consumption end will be realized in the future. Because some investments will take longer to realize their ends while other investments will do so in less time, choosing between investments requires entrepreneurs to compare their intertemporal character. Fetter argued that time preference is the principle that reconciles the intertemporal variation among investment projects. Persons have a preference for sooner satisfaction of an end over later satisfaction of the same end. They apply a heavier discount then the later the satisfaction is realized. To satisfy people's time preferences, entrepreneurs will appraise each durable asset in each line of production according to the present value of the revenue stream its productivity generates over its useful lifespan. By concentrating his efforts on the theory of distribution, Fetter sketched out the theory of economic calculation, given definitive expression by Mises several decades later. In the market economy, persons express their preferences for consumer goods relative to money. Prices for these goods emerge as a result. Persons express their time preferences in their supply of and demand for present money. The interest rate emerges as a result. Each and every advance of present money earns the interest rate, whether it is done through a contract loan or through a production process. Entrepreneurs who organize the production of consumer goods use the revenue earned from their sale to consumers to buy factors of production. Their demand for factors of production incorporates an interest rate discount when paying sooner to acquire a resource and receiving revenue later from the sale of goods produced. Rental prices paid to obtain the productive services of a resource will determine the entrepreneur's production costs. Purchase prices of durable producer goods will determine the entrepreneur's liabilities for acquiring and holding on to assets. Prices of the factors of production, then, are reconciled to prices of consumer goods by the earning of profit and suffering of losses by entrepreneurs. These entrepreneurial demands stretch across all of the intermediate stages used to produce the consumer goods, and therefore bind all production into an organic unity, as Fetter put it. The prices of assets owned by each entrepreneur in his enterprise are also determined by entrepreneurial demands for these assets. In this manner, the use of resources is economized for all production and investment decisions across the entire economy. Not only did Fetter make important contributions to economics during a most fertile epoch in the history of economic thought, he was part and parcel of the grand enterprise of economics. The formalization of economics, which Fetter fought so hard to overcome in its Ricardian variant, has risen to ascendancy in its Samuelsonian variant. Economics is now populated by those who either want to exhibit cleverness in solving puzzles of human behavior or in improving state control of human behavior. In contrast, Fetter saw economics as a gateway to understanding the world as it really was, the world of modern capitalism. Understanding, however, was merely the penultimate goal. The ultimate goal was to promote human welfare. In the 1923 article, Value Giving Way to Welfare, Fetter wrote, quote, "But fundamentally the marginalists were committed to an explanation of prices from the side of feeling and choice, and all their study ultimately must be directed toward feeling and choice. Hence marginal value theory is in very essential ways to be distinguished from the older price theory. Indeed, in the history of economic thought, it is a transitional stage between the Ricardian price economics and an explicit welfare economics. Economics is at least pretty fully emancipated from the bonds of a mere price conception. All economic science ultimately must center around human welfare." Close quote. Sadly, Fetter was overly optimistic that economics was on a path to genuine welfare theory at the time of his 1923 articles. He wrote, quote, "We differ therefore greatly with those who think that in the period since marginal theory became dominant, economic thought has not on the whole been advancing in the right direction. If it is not on the main highway, it has not far to go to get there. The change that is now to be made, as we can conceive of it, is much less fundamental than was the change from labor to subjective value theory between 1871 and 1895, and much less than the further developments that had marked the last 25 years. The time was only a generation ago when the economist professing special interest in the psychological aspects of the subject was a rare bird, suspected of being queer and stigmatized as impractical. Now, as it were in a night, psychology in economics has attained the precarious proportions of a fad, accepted and applied prematurely in academic work by overconfident pedagogues or by alleged experts to all sorts of practical purposes in industry. In a similar way, enthusiastic amateurs in the name of popular welfare are ready to ignore all the valid boundaries of the price system, our knowledge of human nature, and the lessons of history, to urge measures of social reform based on good intentions. But these excesses of belief and quackeries in method, sure to result in social loss and failure, can but temporarily discredit the just measure of truth contained in psychological and welfare economics." Close quote. Let us hope that Fetter's optimism wins out and that economics returns to the path leading to the main highway of a sound value theory and a genuine theory of human welfare.
For more content like this, visit Mises.org.